Welcome back. Still watching Business Morning live on Channels Television. Well, last week, AfriInvest Research published the 2023 Nigerian brewery sector update report titled Sipping for Value. The report dissected the major factors that shaped the global and domestic brewery industry landscape in 2022. To share insights from this report, now I have Damilare Shimiu, Head of Investment Research at AfriInvest Research and Consulting. Great to have you on the show.
Yes, good morning, ladies.
Good morning. So, looking at the report now, it's titled the brewery sector report titled "Sipping for Value." Put this in theme. Put this theme in perspective for me. What is the reality? What reality did brewers and most of these consumer goods manufacturers, what did they face in 2022?
Thank you once again, Ladi, for having me on this show, and good morning to all our viewers across the globe watching us. So literally, when someone is sipping a drink, they have two broad objectives to achieve: either to take your time to enjoy the full value of the drink because you're taking at your convenient time, or because you're trying to slow down for an impurity to come closer and you take it away. But in the context of this report, what we're saying is that the Nigerian market, if you look at the structure, the composition, presents what you would describe as a huge potential for brewers. You talk about a population of about 270 million, out of which over 105 million fall between the beer consuming age of 18 and above. You have a population whereby more than 165 million are between the age of 2 and 65. Which is the age that can conveniently take some level of sugar, in terms of talking about non-alcoholic drink, and it's allowed medically. But when you look at this kind of a market that is actually bigger than the combined of the West Africa together, you will think it will be an easy ride for brewers to milk this market and optimize it. But the reality of what the brewers have been going through over the last couple of years, which 2022 also presents a more challenging experience for them, is the fact that they have to be sipping that value that's supposed to be very huge. And to put it in context, brewers, after an impressive recovery from the shock of COVID-19 in 2020, posted decent earnings in 2021. 2022 came, and the brewers woke up to the effects of the negative spillover from the war in Ukraine, we began February last year, which sent price of major inputs skyrocketing, which affected their prices, and it affected their operational costs too as well. But in spite of these numerous challenges, right, we saw price of major items like wheat, which Russia is a major producer, like fertilizer, which is very important for agricultural products, some of which are also inputs in brewery product, skyrocketing, talk of crude oil price or energy goods price. This thing that directly affected brewers' operation. But again, in spite of those challenges and the inherent systemic challenges that brewers have been facing in Nigeria, the logistic problem, the exchange rate problem, and also more pronounced recently, the increased pressure on consumer purchasing wallet due to runaway inflation, Nigerian brewers were still able to sip out value. And that's what we saw in their earnings number last year, where they grew revenue, at least for the three brewers that we use as proxy for the industry, talk of Nigerian breweries, Guinness, and international breweries, combined growing in revenue by about 25%. And when you compare that to 2021, yes, 2021 revenue grew almost 35%. But 2021 was coming from a low year, because there was a pandemic in 2020.
That's a base year effect.
25% growth is huge, and that exactly is what that topic is saying, that the brewer had to seek for value. Yes, the market actually has that potential in terms of population, in terms of demography. Okay. But the challenging environment makes it difficult, but brewers were still standing on top of.
All right, it was definitely a challenging year. That's 2022, but we're now in 2023, and now that the new administration of President Bola Ahmed Tinubu has shown strong indication to remove, the payment of PMS subsidy. We've seen the official rates now for a liter of petrol, about 500 naira, in some parts, and looking at all of this will definitely impact, the consumers' disposable income. What are you expecting for 2023? You did say 2022 was tough. They had to sip for value. How are they going to sip for value in 2023? Because I'm sure if you have to choose between, buying a drink and, filling up your car, transport cost is going to go up. How's that going to play out for the industry?
Yeah, thank you very much, Ladi. Overall, we actually believe that the brewers will still be able to manage to grow their top line by a modest 5% this year. So basically, we are projecting the revenue for that industry using our current proxy by touch 1 trillion level. But again, looking beyond that, the ability to achieve that is anchored on our expectation that the macroeconomic environment will be stable, especially from H2. H1 this year was a bit devastating for brewers. We have some of them that booked severe loss. For instance, Nigerian breweries booked a loss of over 10 billion in Q1 due to the knock-on effect of the currency crunch. Now, tying this to the recent development around the removal of PMS subsidy. Now, the brewery sector happens one of those few sectors of the economy that have direct correlation in terms of the capacity and purchasing power of household. So with the removal of subsidy at a time that wages are still at the hold level, you already realize that the purchasing power of household will be hit, and that will perhaps affect our consumption. And if we use the 2019 National Living Standard Survey data of the National Bureau of Statistics to provide a guide, right? The survey revealed that an average household spend about 65% of income on food and basic things. And out of the composition of expenditure on food and basic things, just about 3.2% goes into consumption of alcohol and non-alcoholic things. So invariably, what that means is that the consumption of alcohol and non-alcoholic drink in the scale of preference of a typical household is not high there. So food comes first, housing and what have you. So to a large extent, to most households, drinks and every other thing is like a secondary need. So if there's severe pressure on the purchasing power, where you have major items like housing, like transportation, but the moment where price is increased, food price goes up, and you begin to see some other essential things like even house rent also jacking up, then it means that a lot of households might be forced to reduce demand. But one of the things we feel might help the brewers is that with this African-Free Continental Trade Agreement in place, the brewers can improve their expansion towards neighboring countries to sell more. And last year, we saw them increasing prices on virtually all brands. As a matter of fact, on average, there was a 25% increase on all brands. So the full effect of the increase in price last year and the ability to penetrate the neighboring market will help them in driving a modest 5% growth. But when you look at that, our expectation of 5% growth in industry revenue compared to the last 2 years, you see that it's not looking very rosy. And the performance in Q1 already gave an hint of what is to come.
And definitely the increase in price of fuel, definitely that's going to play into the whole, inflation story. But how far do you think the consumer, how much do you think the consumer can take, at this time? Because with fuel prices going up, definitely this is going to affect everything. So what kind of cushion do you think can be created for consumers, at this time? Because if the consumers are weak, definitely the producers are going to feel the impact.
Absolutely. I think the strategy to ensure that the brewery sector and other critical sector of the economy don't get suppressed in this period of radical policy changes have to be balanced from both sides. Now, speaking to the brewery industry, we expect that there are some very encouraging trend that we have been seeing recently. For instance, last year, most Nigerian brewers sourced more than 70% of their raw material input locally, right? So which is a very good development, because it means many of them are also investing in backward integration. So it gives them more room to absorb a lot of shocks. Now, but from the perspective of the consumer, it's very important that the government begin to come up with a lot of other initiatives that will help shoulder the effect of some of the reform. Because like I mentioned earlier, the brewery sector and most consumer goods sector have a direct correlation. There's a direct correlation between the demand level and the performance of industry players. So even though events might be compelling brewers to jack up price, they will still be a bit cautious around that, because if they drive more prices, it will affect volume. For instance, last year, based on an estimate, industry volume only managed to expand by just about 2.5% to about 20.6 million hectoliters, which is very slow. Very low. And even based on an estimate for this year, we're not seeing volume expanding by more than 1.7%, which is very low. So, and what effect this means is that if volume expansion is very low, then the other option that brewers will have is to jack up price. But again, given the fact that income is very lean and household does not really have, an average household doesn't rate consumption of beer or non-alcoholic beer as a priority because of the National Living Standards of Very Household Deployment, then it means that it might have direct impact on performance of beer. So we think that the new government that is just coming on board will come up with a lot of initiatives that will cushion the effect, even if we're removing subsidy. Though we think that should be like a phased process, not aggressive. But even if we're doing it aggressively, we need to do a lot of things to ease the burden on households so that other sector of the economy will not take a hit, especially like the brewery sector in terms of their performance.
I guess consumers and producers are going through a lot at this time. Thank you so much, Damilare Shimi. You head investment research, AfriInvest Research and Consulting. Thank you so much.
Thanks for having me on the show.